A lot to unpack in the commodities market from the latest OPEC meeting. Oil prices again giving us the up and down movement this week. Joining me now, we have Mr. Bismarck Rewane, CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning.
Good morning, and thank you for having me.
Fantastic, sir. So we're seeing Brent crude is falling by about 1% this morning after the big jump, we saw to kick off the trading week. So they're saying is, the pause in hostilities between Israel and Iran. Do you see this decline as a, temporary geopolitical reaction, or does it signal a broader easing of risk premiums in the oil market?
Thank you, Larry. The issue is that let us differentiate between price volatility and price reduction. What we do know is that trying to forecast correctly when the Strait of Hormuz is going to be open and when oil markets are going to return to normal is like catching a falling knife. None of us know, and let us not even attempt to do. But what we do know is that for every $5 movement in the price of oil, Nigeria's export revenues will increase by 5% or 51%. In other words, it will be almost 2.5% increase in our export revenues because of a $5 movement in the price of oil. So when it dropped from $98 to $93, you can actually calculate that. And Nigeria's export revenues would increase. Export revenues will actually decrease by as much as over $200 million for that period. So, but on the other side, there's a 49%, which is and you just alluded to it in your that petrol imports and all those dropped. So our domestic production and every $5 movement affects our domestic production, which is 49% of our total oil production. So what is the domestic production? Part of it goes to the Dangote refinery, part of it goes to the modular refineries, and part of it, is used for other uses. So basically, we and Nigeria as a country is exposed to those risks of volatility, but also exposed to the extent that the Nigerian government revenue is distinct from the people's price they pay at the pump. In the last 3 days, the Dangote refinery had actually brought down prices. In spite of the fact that international prices were volatile, they took a strategic decision to bring down prices marginally so that Nigerian citizens will not feel the direct impact or the immediate and total impact of this price volatility. So what have we got with, because we are refining domestically and efficiently, we are now insulated somewhat. But we have not seen the benefits, and we are yet to see the benefits of a sharp drop in the price of oil. What do we think? Our view is that because of the World Cup, at least for the next 30 or 40 days, we are going to see the oil price stay relatively stable and lower. We are going to see less hostility in the Strait of Hormuz and in Iran. So one can predict, without any fear of contradiction, that we'll see the price of oil stay maybe at about $90 a barrel. That's Brent. And WTI about $80 a barrel for now. What happens after the World Cup? What happens if Israel becomes kind of intransigent? Then we'll put prices on volatility, but I doubt that that's going to happen. Our view is that the price of oil has probably peaked and now begins to come down gradually. What does that mean for Nigeria? It means that our revenues are much higher than what we forecast in December and January this year. But how are we going to deploy that increased revenue? That is why you see today, or in the last 2-3 months, the naira has been stable and has appreciated against the basket of currencies in which we trade. So one can say categorically that the price of PMS, the price of diesel, is not likely to increase. If anything, will decline. The value of the naira is still up 13 or 14% undervalued, which means that the naira is not likely to depreciate or be devalued significantly.
Right.
Because central bank on top of that. So, and what is the effect of that on prices? I think that has a very, it makes prices, it increases disinflation and reduces the impact of price increases for now.
Okay, well, I guess, at this point, some of us rejoice when we see, oil prices, coming down, but at the same time, that's bad for, government revenue. But let's look at OPEC Plus now. They've had their meeting, that was over the weekend, and they collectively agreed to raise oil production by 188,000 barrels per day. That's for July. What does this signal about the group's confidence in global oil demand?
Like every cartel and every oligopoly, it's about who are price leaders and who are price takers. Do not forget, you will recall that UAE exited OPEC, and UAE has about almost 3 million barrels a day. So OPEC's share of total global oil supply is hovering at about almost 30%, which is normal. But as we move along, I think there's a lot of discussion in Nigeria that, oh, what do we gain by being in OPEC? It is what do you lose if OPEC falls apart? What you lose if OPEC falls apart is that you have no control over price and you have no control over output. So we get screwed if that happens. So it's in our best interest that OPEC holds together and OPEC Plus holds together, and that there is what we call mutually assured production limits, which means that not everybody suffer. Saudi Arabia needs oil price at about $70, $80 a barrel. We need it as high as possible. But the question that Nigerians are asking that, yes, you said just now that the price of oil increases, good for government revenue. But the price of oil increases is bad for the pockets of Ladi and self. So we are caught in between. But if the government can deploy its resources efficiently and reduce leakages, then we'll win-win. Win for government revenue investors and win for us because we're buying less petrol.
Right, and definitely we're hoping that, even if oil prices go up, it's also a win for the people, even though it is mostly for the government.
Yes,
at this time.
I wanted to make a comment. We expect next week the Federal Reserve to meet. And all eyes on the fact, this will be the first meeting chaired by Kevin Walsh. And the whole idea, he said two things. One, he's not too concerned about the interest rate, which we all expect to keep constant. But he's going to de-emphasize the guidance. Normally what happens is that the Fed chairman makes his broadcast and tells people that this is the decision. But the guidance is that we expect this to happen in the next quarter or two. And people take their cue from the guidance. Kevin Walsh says he doesn't think that the Fed is in the best position to be forecasting or giving guidance. So what we're going to see is a rate hold, but very limited guidance for the future. So it means that volatility in markets, in stock markets, asset markets, Bitcoin, stable coins, and all of that, is going to be higher because there's limited guidance for the Federal Reserve. I think that is something that we have to bear in mind. And before we go, I would like to touch on the stock market has been flat and has actually declined over the last week or two. Why is this happening? Is it that, listen to you, Ladi, about this, is it that people are selling stocks to build up a war chest to buy into the IPOs? Because it's not just IPOs. The IPO of the Dangote refinery is one, but you have IPOs of SpaceX, we have IPO of OpenAI today, and we have IPO of Rempic. So when you look at that, it's not only here that very rational investors are making the decisions that buy on the rumor and sell on the news. So everybody's preparing to buy on the rumor and also sell on the news after the IPO is finished. But we've seen situations where post-IPO, we've seen share prices drop after an IPO before it recovers. So if you are borrowing to buy into an IPO, you've got to be careful. But if you are, and I'm not talking about IPO in Nigeria, I'm talking about IPO globally. We've seen a lot of international foreign portfolio investors who are going short on stocks and preparing to take advantage of the IPOs. Because all of them want to be like Elon Musk, if it's possible. Not all of them want to be like Warren Buffett, who is conservative and a prudent investor.
Or maybe the asset managers and investors should, source funds from elsewhere instead of selling down on some of the stocks they already own just to get into these IPOs.
No, what they do, they rotate their portfolios. You never know. You never know. You know, again, like I said, at times it's like trying to catch a falling knife. You'll never know.
All right, there's the IPO frenzy. We'll definitely keep watching out and see how these IPOs perform, you know, post-listing.
Glad you stay tuned. The IPO is going to make money for a lot of people.
Exactly. Right? Yeah, hopefully we can, you know, put some money, you know, in there.
Yes.
Thank you so much, Mr. Bismarck Rewane, MD CEO, Financial Derivatives Company. Thank you so much, sir.